Good evening, everyone, and welcome to this first edition of the 2019 Community Forum Talk About It Tuesday. We're delighted to have all of you here this evening, and on behalf of our Executive Director and all of our staff here at the Withers Collection, we want you to always feel free to join us on the last Tuesday of every month for this forum. It is community engagement oriented, so it is free and open to the public. The reason that we're all here tonight is to have some information or add some information to our tax time toolbox, thanks to our wonderful panelists who will be presenting information to us this evening. But at this time, I would like to draw our attention to our moderator. Our moderator for Talk About It Tuesday, rejoining us from 2018, is Miss Jenny Bird. We want to thank you, Jan, for being so faithful to us, and now present to you, Jan Bird.
Good afternoon. Thank you, Ms. Angela, for that wonderful introduction. Just a disclaimer, we have to embellish those, biographies, so some of these things may or may not be true about me. No, they're true. Thank you all for joining us tonight. I appreciate you all coming in probably one of the coldest days of the year so far. I'd like to begin with, actually let me start with the disclaimer since we're talking about taxes. Please consult your individual tax professionals about anything that you may have heard that you believe is applicable to you, as we do not want to be sued and we are not liable. This is just information only, just to put that out there. Nonetheless, thank you all for coming. I'd like to start with our panelists. I'll begin with Ms. Geraldine Hunter-Gaddis to my left. Geraldine Gaddis is currently the CEO and President of Barriata Mobile Disaster Tax Services, a nonprofit organization. She is a 28-year veteran of the IRS as a certified training instructor in federal tax law and tax preparation. She has been a volunteer and site coordinator with the IRS and VITA, Volunteer Income Tax Assistant Program, for more than 34 years. Geraldine received the Rookie of the Year Award from the IRS District Office in Nashville, Tennessee, and was represented and it was presented to me by Esther Parker, the spec for my site location. Please welcome Geraldine Hunter-Gaddis. To my right, we have Dr. D. Lofton. Dr. D is currently the founder of the Doc Shop, a management consultancy firm for small businesses and nonprofit organizations. She is a retired project manager from the IRS, specializing in examination and implementation of new tax laws and programs. As a certified training instructor in federal tax law and tax preparation, she's been a volunteer and site coordinator with the IRS. Is it VITA or VITA? VITA program for 36 years. Dr. D is now working on new individual and business tax law courses for the Entrepreneurs Training Institute, ETI. Please welcome Dr. D. Lofton. And to her right, we have Carl Lofton. Carl Lofton has worked for the IRS. If you have not noticed the theme, there is one. Carl Lofton has worked for the IRS for more than 9 years in the Wage and Investments Accounts Management Division. He currently serves as a supervisor in the Planning and Analysis Group, which conducts employee quality reviews. He has worked directly with taxpayers, helping them to resolve a wide range of issues, and is a lead instructor for the new hire training. His areas of expertise include tax law, amended returns, and inter-spouse claims. Please welcome Carl Lofton. Okay, so to begin our panel tonight, I would like to start with the panelists to give 3 to 5 minutes opening statements, and from there we will start the discussion. We'll start with you, Dr. D.
Good evening. So you may be aware that there's been a lot of change in tax law for 2018. And a lot of those changes affect the average taxpayer as opposed to one sector of the community like we normally see. The changes this time will impact your everyday worker as well as the ultra income taxpayers. So what I want to just kind of highlight some of the larger changes that will affect most people, and then we'll talk about the changes to the return itself, and then Geraldine will talk about the services for the mobile people, where she goes to them, and she'll talk about those services, and then we'll open for Q&A. So some of the big things, we highlighted 9 changes that's going to change the way you look at your taxes, determine your deductions, and figure out what you owe. Notice I didn't say refund. It's not going to be a whole lot of codes anymore. All right, so are you familiar with the standard deduction versus itemized deductions on your tax return? So one group will be eligible for just taking a blanket amount because they don't have those things that you normally itemize, like a house, real estate taxes, employee expenses, those things. They just have wages and they want to reduce it as much as they can, right? So that's the standard deduction. In the past, you've had a standard deduction that was a blanket amount based on you also getting a personal exemption. Is everyone familiar with a personal exemption? So a personal exemption is, I am the taxpayer and I have a spouse. We each would get a certain amount off of our joint income. In addition to that, I would also get what every other American gets, which is the standard deduction. The big change for 2018 is that personal exemption has been eliminated. That is going to impact whether or not you owe or get a refund for everybody, regardless to what your basic tax rate is. In place of a personal exemption and the standard deduction, you will now get a larger standard deduction. However, if you add last year's personal exemption to last year's standard deduction, the new one does not equal. So even though you may hear people saying, you know, I made this better for you, it's double, it's not better for you because it's not equal. It may be doubled from last year, but it's not equal to having gotten a personal exemption and a standard deduction. So having said that, if you are single, you may take $12,000 off of your total income, subject to tax. So remember, you don't determine your taxability until after you have done at least the basic deductions from your income. So this is after you have made that first determination, then you get to take $12,000 off your income. If you are married, filing a joint return, you may take $24,000. So if you notice, it's double what they're giving a single person. That is the huge change. In the past, there was a disparity between what a single person got and what a married person got. Head of household, you may take $18,000. But in the past, if you had a family, 1 taxpayer, 2 children, you each got $6,000. So you see, it's not quite going to add up equally. If you are over age 65, or you have any other conditions over age 65, you're disabled, you're blind, then you will get to take an additional $1,300. So that would be your standard deduction plus $1,300, which is different from how it was calculated in the past. Medical and dental expenses have not changed, which is not really good news because you had to meet a 7.5% threshold before you could take the first dollar. So unless you had catastrophic illness, you couldn't take your medical expenses. So that's one we were hoping would change, but it didn't. Student loan interest. There's no change to how student loan interest is calculated, and the cap is still $2,500. So if you're someone that's paying for 2 or 3 degrees, you know, then you're capped at $2,500. You may have paid 3 times that. Personal exemption, I told you that's eliminated. Standard deduction has doubled. Unreimbursed employee expenses. How many people work in a job where the employer does not cover all your expenses? Like you may be expected to go out and make cold calls or sales, but they don't give you gas money. Or you may be expected to do deliveries, but they don't give you mileage. In the past, you could take those expenses because it was a cost of doing somebody else's business. And you could take that because it wasn't your business, it was someone else's. That's been eliminated. So now if you have job hunting costs or employer unreimbursed costs, it'll be up to the employer. And so this is where unions will come in. If you're in an industry where there is unions, you will definitely see them fight for this one. But other than that, you'll incur these costs, which will reduce the availability of income to your household, but you won't get a tax deduction for that. Moving expenses have been eliminated. So in the past, if you lived in Memphis and you took a job, say in Oakland, Tennessee, it's not far, but it was over 50 miles. And if you chose to move closer to that job, you could take that cost of actually packing up your household off your taxes. That is no longer true. So what their hope was that if they eliminated it at a personal income tax level, that more employers would offer to pay your move, but they didn't mandate it, so it's still up to the employer. Okay, interest on home mortgage indebtedness. A few years ago, that was the hot thing. Everybody took out a second mortgage or a line of credit. And the line of credit now for mortgages after 2017, if you bought a new house, is $750,000 max mortgage that you can take the interest indebtedness. For most people, that's not going to be a huge thing. However, if you had an old mortgage and you took out a huge loan with a high interest, you can take 100%. So just, you got a new house or you bought a new house, even if it was an older home, you just bought it in 2017 or later, then yours would be limited. But if you have an older home and you decide to take out another home mortgage, then you up to $1 million in indebtedness and you can still do that. Home equity loan interest. So a lot of people took out second mortgages and lines of credit and remained in their home. It wasn't due to a sale. Now, if you do that, and you do not use that money specifically for the property you took the loan out for, you don't get that interest deduction anymore. So those people that did it to put their kids through college or to pay medical bills or just debt consolidation. A lot of people took that line of credit and eliminated all other debt and just took the debt from the home. It won't be deductible anymore. And we'll take questions on all of this. State and local tax, we call it SALT. In Tennessee, we do not have state tax. So you were able to take local sales tax in place of the state tax, which is the LT part of the SALT. But if you're living in Mississippi, where you have local and state tax, then it's capped at $10,000 max. So if you have a big house indebtedness and you're paying a lot of real estate tax and you're paying local sales tax, you could reach that $10,000 very quickly. All right, so do you want to everybody speak and then take questions at the end? You want to do that, Georgie? Okay. All right, so that's the overview, good news and bad. And we'll take questions on that section after everybody has presented. Thank you.
Good evening. Good evening. And I'm going to kind of piggyback on a few things that she said. And this is dealing with taxpayers who are Uber or Lyft drivers. You may actually get imposed an additional tax from your company. You should get two forms, a 1099K and a 1099 miscellaneous. And so I did leave some information that I kind of explained to you and what you need to do to take it to your preparer to make sure you're not taxed on that income. Okay? And then I'm going to talk about the mobile tax. I went VITAL, which stands for Volunteer Income Tax Assistance. And what we do, we actually are at various location malls, and we assist people who are low income, who cannot afford to actually pay. If they're making $54,000 or less, they can get it prepared free. My organization, I actually also go mobile to hospitals. If someone is sick in the hospital, I go there. But also, if there are anyone needing to know where their locations are, they can call 211, which is the library. They have the listing, and based on your zip code, they can tell you where you can actually go to get this service free. Also, what I provided, my site location is, I actually deal with links and levies. So we do have other sites that provide this service as well based on their certification. Okay.
Say
This
more
one?
about the liens and levies.
Okay. Well, I deal with my particular site, I deal with people who have liens and levies, who have letters from the IRS. So usually they bring it to me, then I'm able to, as an enrolled agent, I also practice like an attorney before the IRS. So what I do is I actually negotiate their payments or look at their situation. Sometimes they may qualify to submit an offer and compromise. And so it's based on their situation. I let them know, because they do charge you as well to submit that offer. So I look at their situation and I better explain to them what their options are.
Now, is that an appointment service, Joe?
Right now it's not an appointment service. I have a walk-in, and so if it where I actually need to get with them to get more in depth, then I will reschedule for an appointment. Okay. All right. Okay. Thank you.
Come on, Carl, I got 4 questions.
Hello. Oh, I hope so. All right, so we're going to talk about the new streamlined 1040 form. Cosmetically, it is streamlined, meaning that the form itself is shorter. But what they've done is take a lot of the lines and sections and add them into separate forms that would also need to be completed to feed into the smaller 1040 form. So it's even smaller than the 1040 EZ used to be in the past. One side is going to contain your entity information, which is your name, your address, things like that, signatures, your dependents' names, and things like that. And the other side, it would be where all of your income goes. There are copies on the tables if you want to look on. The second side is going to be where all your income goes, and where all of these numerous new schedules would be reported. So if you come down here where it's talking about the new schedules, basically the entire second half of the original 1040 has been added to Schedule 1. That's going to be where your additional income and your adjustments to income are now located. Schedule 2 is going to be your basic standard tax for your wage earners. Your Schedule 3 would be where that second side of the 1040 would be for your non-refundable credits, child tax credit, education credit, and things like that. Schedule 4, which would be other taxes. This would be for people who are self-employed, involve self-employment tax or alternative minimum tax or some other form of tax other than wages. 5 will be other payments and refundable credits. That does not include earned income credit. They do still have its own dedicated line for that, but this will be for additional, for other miscellaneous payments that you can make, as well as, I believe, withholding too. And Schedule 6 for foreign address and third-party designees, which was previously would have been covered in the original entity section and the signature portion of the original 1040, but there's not a separate schedule for that. So, you know, in the past, the majority of the returns have been e-filed, so it's going to streamline that process a lot more if you do e-file. A lot of those companies make it kind of dummy-proof. They ask you questions, you just plug in the numbers, and it does the form for you. But if you do your return by paper, you know, they say it's been streamlined, but it's actually not going to save you any time. It's probably going to be a little more time, but the same calculations. They just wanted to make the form small.
Appears small.
Right, and it's probably gonna be like a postcard, front and back. So, y'all, so we ready for?
You can start with you.
Okay. All right, so we got any questions that I can take up this year? We have 4, yes.
What are the positives about all the changes? What's the good news?
Well,
Like,
it just
is there
depends.
any good news?
I guess it would depend on what your situation is in your life. You know, if you are a single person, maybe with 1 child, you actually may come out better. Or if you're a person who has 3 children but didn't make quite that much, you will kind of even out. It won't be too much different from what you said in the past. But if your taxable income is going to exceed $57,000, then you're going to see a drastic increase in what you would normally pay in straight income tax. It's a big giant jump in that tax bracket. And they've reduced the amount of available tax brackets to broaden that. So it's now from 13,000 to 57,000. 57,000 to hundreds of thousands, as opposed to where it broke it down, you know, every $50 something like that. So
So what about for business owners? Are there any, like, do you see any positives for business owners, small business owners?
I will be perfectly honest, I don't see any positives as, if you say positive meaning more money coming back to you, no, there's for a small self-employed person, unless, you know, your business didn't do that well, you probably want to owe some money. And of course, we all want our businesses to do well. So if your business did well, you're going to probably owe, and probably a little more than you did last year.
So it's too late for me to have some children for a refund.
Not before next year, 2018, it's over. Unless
And
you
how many I need? It's not
well, I guess 3 would be the magic number. If you can go past 3, you don't really get anything else extra.
3.